Welcome to the CHCH Newsmakers Podcast. I'm your host, Rick Zamperin. If it is making news in Hamilton, Halton, and Niagara, across Canada, around the world, rest assured I will be tackling it here on Newsmakers. And our guest today says the Canadian economy could use a big fix. Corporate concentration has been growing steadily in our country, and it has led to higher prices, lower wages, as well as less innovation and growth. Joining me today is Vass Bednar, the Managing Director at the Canadian Shield Institute, who co-authored the book, The Big Fix, How Companies Capture Markets and Harm Canadians. Vass, welcome.
Thanks for having me.
As I read in your outstanding book, I loved it from cover to cover.
Thank you.
This is a big problem. Companies have grown so big, so fast, but not through innovation. What is happening?
I mean, occasionally that's the case, right? Big isn't bad. We want companies to grow and scale in Canada. It's exciting, it's motivating for firms, and it's great for the country. What my co-author Denise and I sort of point to is that increasingly we have situations where we have firms that perpetuate the illusion of rivalry, which we call corporate kayfabe, which is a shout out to wrestling. But it kind of, because of how ownership works and kind of the brands and maybe the companies that one larger firm might have, it appears to us on sort of the surface that there's more competition in various markets than is actually the case. And those kind of illusions, that description, is something we were really focused on bringing forward in the book.
I do want to get to the kayfabe scenario because I loved the analogy that you did make with professional wrestling. But does Canada have a monopoly problem?
I think Canada does have a consolidation problem. We've seen research in partnership with Statistics Canada and the Competition Bureau from a couple of years ago that shows more corporate consolidation over time. You know, as Canadians, we're often asking ourselves, why is it that we underinvest in research and development? We underinvest in workers. Why are our companies slower, to adopt productivity enhancing technologies? And part of that could be that they're just a little bit too comfy sometimes, right? There's not enough competitive pressure to spur those investments and those innovations. I mean, you'd want to see even a firm that is, a dominant firm in a market investing significantly in research and development that will stimulate and promote innovation. But we don't always see that in Canada. Now, the moment's very different, right? We wrote this book before a trade war. We wrote this book before Canada was rethinking its relationships and before, we had this much deeper awareness. Actually, I think our economic nationalism right now is much more consumer focused, right? What are we purchasing? What's the origin of that purchasing? And maybe where are we going on summer vacation? And it begs the question of what could the next layer of our economic nationalism look like? And what would that mean for our approach to competition policy? Long answer.
Yes, no, but it makes perfect sense. But this issue didn't suddenly crop up. This has been a slow roll. But how did we get to this point?
Yeah, how did we get here? Oh, so many people have been asking themselves that. I suppose, one way we got here is that historically, competition law was maybe comparatively weaker. So there's been a series of amendments between 2022 and 2025 that has strengthened the law and empowered the Competition Bureau. The big debate before that was, is the law flexible and fit for purpose and it's just under enforced, or is the law just so weak that we're not noticing, not reviewing mergers that should be merged, or ignoring kind of newer forms of business behaviors that occur in a digital economy context that the law just couldn't really contemplate, right? So you see conversations now in Canada. There's great public awareness around junk fees, right? We only made drip pricing illegal in 2022, but that's a big deal. That's a behavior that occurs independent of how big a firm is. So when I say earlier, big isn't bad, it's not. But what big can do is large companies can start new behaviors or structures, right, that become replicated by firms of all sizes. And when we have regulatory lag, when we don't comment on what the weaknesses or what the potential problems or harms would be, one of the more esoteric terms with those behaviors, then we're not ready, respond, and we sort of tacitly endorse those structures. So things like self-preferencing, which you might have heard of, when a company owns and operates its own marketplace, when you search for, let's pick on the Bay because they're sort of fizzling, right? When you search at the Bay in their search bar, they're more likely to surface the products that they own before they surface products, from competitors. But to an average person, that shopping experience feels like they're entering a marketplace that is curated by the Bay, which it is. Again, there's a sort of unknowability for everyday people, and we often ignore the experiences of smaller independent businesses in online marketplaces. So I would say that's some of the problem. We're not always listening and being as responsive as we could be.
Is Canada alone in seeing dwindling competition in the marketplace? This must be happening elsewhere.
Yeah, we're not totally alone. We're not totally alone. I mean, historically, because of, the 80s, basically, we did exhibit preferences for that national champion model, right? Where we felt like we had to support a winner in a Canadian context so we could, export that company and compete globally. What we're not alone on is facing the realities of a digital economy, right? When we look at juggernauts like Amazon and the increasing fees and hurdles and sort of what Amazon researcher Stacy Mitchell would call tolls, Amazon's toll road, we see that, those fees are increasing every year. And basically Amazon takes something like 45% of every dollar earned by a small independent seller. So is that just the price of accessing the rails that they've created for a digital marketplace, or is that them potentially abusing the dominance that they have to sort of squeeze people more and more? That's not a Canadian problem. But the question for policymakers, I think all the time with the digital economy is, can we do this alone, or do we have to coordinate and harmonize, right? And also, how do we start to think about those appropriate regulations for a digital economy, which again is a very long answer for you, but I would put forward to you that Canada's biggest blind spot with competition is we've relegated it to one bureau within one ministry, and we haven't taken this kind of comprehensive, more holistic approach that says, supporting healthy markets is not just the responsibility of one bureau within one ministry. It's actually a role for the state writ large, and we want to coordinate with provinces and municipalities and across ministries to actually bring forward a range of initiatives that will, clarify and break open markets so that they are more robust.
A little later on in the CHCH Newsmakers podcast, we're going to get Vass's thoughts on the big fix and how it can happen and maybe how quickly it can happen. But in a perfect world, what does competition or more competition do to the marketplace?
I mean, ideally, more competition helps lower prices, right? Because people are competing more often for you instead of competing algorithmically now and trying to extort the maximum possible price from everyone. We see more innovation in terms of products and novelty. And we also see better opportunities for workers and more mobility for workers. Another indicator of, a healthy market is the startup rate, right? Entrepreneurs, people feeling that they, the barriers to entry aren't too high and that their foray into entrepreneurship is, de-risked enough that they feel they have a shot to make a dent at something. And we know in Canada that new business starts and startup starts are, low. There's fewer and fewer every year. And that's disappointing for Canada.
You mentioned the term kayfabe earlier on in our conversation. I loved your analogy in what professional wrestling does very well in manufacturing rivalries and that kind of competition. That's happening in our country and beyond, obviously.
Yeah, it does happen, right? Sometimes it happens at the grocery store, right? All the major grocers have private label brands, which is interesting and important. and they would probably argue acts as a pricing anchor, because typically those private label brands are discount brands that offer the lowest possible price. And one of the reasons they can offer you the lowest possible price at the grocery store is because there's all these other, back to tolls and sort of fees, that other suppliers pay grocery stores, right? A shelving fee, a fee to receive their food at the grocery store, etc. And this has long been the norm of grocery. But the other reality is, again, the price of entry into that market for a company is that all their business data is now owned by a company that they're also directly competing with, right? Say if they're competing on President's Choice can of soup. This is not a great example, but it's like, it works, right? That's really different from how markets used to work before. Suddenly the parent company knows who's buying the competitor's soup, how often, what their characteristics tend to be in what markets. And something we're seeing is that occasionally, this has been documented with Target in the US, in a Target situation, instead of continuing to directly compete, they will just replicate a successful competitor and then cut them out of the marketplace entirely. So if everyone is buying red t-shirts from a particular brand, Target will start manufacturing a red t-shirt, and then instead of directly competing, just kick them out of the market. So again, back to illusions of competition and how power has maybe shifted, and who's making markets, and how those norms are set with markets. That's changed over time, and that's been one of the motivations for Denise and I and many other people talking about whether that law is fit for purpose, whether and where we need complementary sources of legislation, and also just how we should be thinking about optimizing markets and what market regulation means beyond just, again, policing the economy and disciplining bad actors.
We're talking about the book, The Big Fix, with one of the co-authors, Vass Bednar, the managing director of the Canadian Shield Institute. Now, you mentioned, big isn't necessarily bad, and I hate to pick on Rogers, but it had a really infamous outage back in 2021. You write about it in the book, a perfect example of a company that grew so large that even this devastating incident didn't really make a dent in its fortunes. Subscriptions went up. It's charging people more money by the day. This is an example of big being bad for consumers.
Yeah, that's a good way of putting it. We were shocked to find, the stock price didn't really dip for that long, even though consumer complaints went up, as you said. Revenue was still increasing, and it might have reputationally sort of hurt the company, but it did not hurt them from a business element. And I mean, often, telecom, grocery, banking, airlines, media, newspapers are often people's primary entry point into the competition conversation. So we often see a focus on federally regulated industries. But the market, writ large, there's lots of marketplaces that are shifting and being changed or financialized, right, where ownership is shifting as well. And I think that all comes back to maybe this other bigger conversation many of us are locked in right now, which is, what does it mean for a product or for a company to be Canadian? The grocery store, we really care. We're sort of obsessing right now around like country of origin. Is something a product of Canada and made in Canada or made in Canada? And I understand why people care about this. And it is, those shifts, micro shifts, are really powerful. But just because something's made in Canada doesn't mean it's a Canadian company that you're supporting, right? And I think that's maybe another layer of discovery in terms of understanding how Canada works that we can, or try to bring forward in our book, which is really a primer, right? It's really an invitation to what we think is the contemporary conversation on competition.
I'm glad you went to the grocery store, Vass, because another company Canadians love to hate, as you know, is Loblaw. And we're seeing the dislike growing, especially since the COVID-19 pandemic and the years since. And we've seen rising food prices at the grocery store. If we had more competition in the grocery industry in this country, do you think prices would be as high as they are right now?
I'm not sure. I mean, grocery in itself is a really complex marketplace with very tight margins. But a grocery store is not just a grocery store, right? Is Loblaw a real estate company? I don't know, but they own a lot of property. Are they a pharmacy? They own pharmacies. They're the largest provider of physiotherapy clinics, I believe, right? They've got private label products. I think they're experimenting with green, delivery trucks. So the complexity of the core company itself, I think, is something that Denise and I were even more interested in, right? We've seen other grocery stores kick the tires on coming to Canada. I mean, I love the snacks at Trader Joe's. It'd be fun to have a Trader Joe's here, but it's important that we maybe understand why don't we have a Trader Joe's here? And it's not a legislative barrier. I think what we would hear from potential competitors like Aldi as the parent company of Trader Joe's is they would say, one, it's hard to access this market because of real estate. Two, the population is weirdly distributed here. So there's only, certain maybe highly urban places that they want to be. And three, maybe the margins are too tight, which is why you see that broad diversification of Loblaw. And by the way that Loblaw is structured is not, again, back to being good or bad. I'm not passing a value judgment there. I think it's really intriguing how the company's evolved, right? Especially how they've used the acquisition of the Optimum, Shoppers Optimum points, the loyalty program, to get to know their customers and offer, exclusive deals and elements that are personalized. But again, these are data-driven decisions from a company that wants to know more and more and more about you. By the way, Loblaw, you can also get a cell phone there. You can get a credit card. You can do your banking. Like, these are fascinating companies. And I'm not sure I would call it a grocery store. I would say that it has a grocery store. We have this, I thought, awesome quote in the book. Now I'm picking on the Bay again, but the CEO of the Bay, of course, not a store that was Canadian at the end, was sold to a private equity firm, saying on an earnings call, we're not a retail company, we're a real estate company. Right? So understanding how firms look at themselves in terms of their primary function or the primary assets that they have is important to understanding, I think, those nuances related to competition. So would prices go down? I mean, there'd be a bit more competition. There's other ways we could structure grocery stores to maybe improve competition. And there's also, I've wrote about this in a little piece for the Broadband Institute. Maybe in instances where we have food deserts and the market has failed, maybe there's a role for the state to stimulate food co-ops or, experiment with state-facilitated grocery store, that sort of thing.
In one section of the book, and I really loved reading about this, you noted that during times of shock, like a pandemic, which we're not that far from, companies have historically raised prices, yet apart from Canada's bread price-fixing scandal that we know all too much about, we've rarely seen collusion-related charges. Why is that?
It's really hard to prove. So Jim Stanford has done some work on this in a Canadian context, building on Isabella Weber's research on sellers inflation. And there is some evidence that actually, again, in the trade war. So Isabella Weber's work was saying, the shock of the pandemic, many firms took advantage of this because we were sort of bracing for higher prices, and they inflated prices higher than they needed to go. So Economics 101 will tell you that, as the price of inputs comes down, the price of, the good overall will come down too. But that also wasn't happening in the pandemic, right? Those higher prices were proving to be quite sticky. Now with the trade war, and I think it's fair to call it a war, but it is exhausting to hear that term. I'll acknowledge that. I think we have seen early indicators that some firms have taken, again, advantage of that, and that we're anticipating higher prices to slightly maybe nudge up prices maybe higher than they need to be or than they would have been otherwise. The thing is, firms have always had pricing power, right? That's their job, to set and calibrate the price for, what they're offering. And I think another interesting, more modern dynamic that we're starting to see is that hyper kind of micro calibration of prices. Probably doesn't happen with something you're seeing on a shelf, but when we're shopping online, for different people, for different times of day, that price is being optimized, or sort of there's a bit more of experimentation in terms of the price that you're seeing and that I'm seeing. Whereas, I find my mind still sort of thinks that most things are the same price if it's kind of an object, whereas with I get it. Concert tickets, hotel rooms, airline flights. We anticipate more price elasticity there because, there's more constraints kind of at play.
In those areas as well, we've also seen the rise of surge pricing, right? There's a big concert in town. The price of a hotel is going to go up. The supply and demand factor comes in that. But is that also a byproduct of little competition in some of those marketplaces?
Well, yeah, I try to see it from both sides and sort of appreciate, is there room for surge pricing? Should the amount that a price can surge be capped in some way? Should we have guidelines in some way? I mean, when I was looking at veterinarian pricing guidelines globally, because I am fun at parties and have a lot of hobbies, I was struck that in Germany, I'm just bringing this forward as an example, I promise it's relevant. In Germany, they have a fee schedule that isn't suggested. It's the fee range for vet services and can go up to 3 times the posted amount, but you have to rationalize it. So you can actually surge price at the vet, arguably, but you can say, look, it was an emergency and it's Christmas Day, so it's going to cost you a bit more than usual. And I think the market kind of understands that, right? I think people are comfortable with some flexibility. But are we going to see an instance where it's a Taylor Swift concert? Should my beer be more expensive? Should my hamburger be more expensive that weekend? Should public transit be more expensive that weekend because there are more people around? I think a lot of people would say intuitively, no. So again, how do we differentiate and set boundaries and also understand where we think it's permissible and acceptable and kind of good business for there to be those fluctuations versus when we think we're getting into a situation where we're seeing price gouging or actually a newer element of Canada's competition law that's been, to my knowledge, pretty untested around I think the language is fair and excessive pricing, right? What a question. What is an excessive price? Who decides and how do you decide that? Wow, not easy.
No, that's a great point. Let's get to the big fix and some of your ideas on how we can get there. Where do we start?
Where do we start? Our big fix kind of riffs from something that was really successful under the Biden administration. So our big fix is kind of a democratization, a sharing of power and responsibility for competition policy and saying it's actually got to be the job of every ministry and you have to work across orders of government. So under President Biden, there was this historic executive order. It was pretty cool. They committed to 72 concrete actions related to improving competition. And each of those changes in and of themselves were not revolutionary, right? A price cap for insulin, making hearing aids more affordable, preventing vertical integration of pharmacies with insurers, like tiny, little snack sizes. But in aggregate, these interventions are very powerful, right? They really start to remake markets and sort of strengthen things. So I had a piece in the Walrus earlier this week kind of just critiquing or rolling my eyes a little bit that we're getting so excited in Canada about this project around reducing interprovincial trade barriers. I see that more as a foundation for what's next. How are we going to work quickly and together and focus on improving markets, right? That's what Denise and I think we need to do. We have lots of, again, those little smaller, maybe more localized ideas that, strengthen and sort of tighten up and make your economy more, you could say, efficient, if you like, but certainly more fair. We also need to listen to people more often. We need more journalism. I'm glad you're a journalist talking about competition, but in the US and other jurisdictions, partially a function of their size, they have dedicated reporting on marketplaces and competition. We don't have that in Canada, but when we do have it, we see these really fast policy follows. So there was a piece from the Halifax Examiner a couple of years back now, kind of an expose demonstrating that Sobeys, as a landlord, had imposed a restrictive covenant on a dollar store. And they had said to, might have been a Dollarama, they had said, yes, you can be in our real estate area because they're the landlord, but you can't sell bread. So is that good business or is that an abuse of their dominance? And because of that, the Competition Bureau has been investigating property controls. I think maybe just in a grocery context. I hope I didn't misspeak there. But again, that journalism, that storytelling, that sense making, that whistleblowing can be really transformative in terms of improving markets. So that's our big fix. We've also written about it in policy options, and we are always happy to pitch and talk about what could be done. And I would also say we don't pretend to know everything that Canada needs to do, and that's not how Denise and I want to show up in policy spaces. We've got a hunch that this could be really powerful and important for Canada, and we're always talking to other people and learning and asking them what else they think should be done. Ontario is the only province that has banned non-compete clauses for workers. Now, people will tell you, these non-compete, so they don't really stand up in court. I don't disagree, right? They don't. But they're increasingly being used as a tactic to intimidate lower wage service workers. For instance, Tim Hortons franchisees have been found to use non-compete clauses. So if there's two Tim Hortons in the same town and you have, 4 years of experience at Tim Hortons and you want to level up or negotiate for a higher wage, you can't go over to that other Tim Hortons in town. And that's a restriction on labor competition, right? That we probably don't need and don't really want. But it's sometimes hard to think about these things or sort of find them maybe.
In the book as well, you point to this big fix needs all levels of government to make change. And without this policy from the government standpoint, nothing's going to happen, right? It's not like the businesses are going to say, okay, we need more competition. This is going to have to come from governments.
I think businesses do want more competition, though. I think of the startup community. I think of the fintech community, right, who's been pushing for certain policy changes and nipping at the heels of the incumbents for a while. You've got to have balls to take on incumbents in Canada as a startup. So I think, again, it may not be politically elegant to say the equivalent of we're going to do a bunch of little things that add up to something meaningful. But that is what we're doing with reducing interprovincial trade barriers. And we seem to have gotten people pretty excited about it, right? Talking about this thing, one Canadian economy. Well, what does that mean? What is the next version of that? What's the real vision, right? How do we support and stimulate more competition? It has to be through conversation and it has to be through coordination. And you probably need someone federally in the Privy Council office and or the Prime Minister's office who's acting as kind of a whip or a steward of all of these initiatives and seeing, where they go.
U.S. tariffs against Canadian goods, is that hurting or helping competition? Or both?
Oh my God, I think both. It's a great question because, as we see people switching to trying to be more exclusively associated with Canadian companies or Canadian goods, you could argue that that restricts competition, right? That we are self-imposing restrictions on what we can access. Earlier this year, the Globe and Mail had a great kind of folio special and a beautiful interactive online around, you click a certain product or subcategory and we'll curate the Canadian versions for you. And some of the Canadian versions, there weren't very many, right? Or I think stoves or microwave ovens. There was one kind of what is it, household machines called? You know what I mean? Anyway.
Okay.
One of those, no, they're called, it's like a category, like your washing machine, your dishwasher, these are called
appliances.
Thank you. Appliances. Oh my gosh.
It's too early in the morning, Vass.
Yeah. There's one kind of appliance that is very hard to find in Canada. Again, so you could argue it's kind of a restriction, but then it's stimulating new markets or helping people understand and appreciate and discover more. And it's also, potentially helping competition. Who knows what other trade agreements we're going to have, right? It's a big regret of ours that we don't have a giant trade chapter in our book. We were confined to 30,000 words, which honestly, those 30,000 go pretty damn fast. But there's many elements in our trade agreements that restrict Canada's, restrict us. we call them trade agreements, and you think that they are just about, smoothing and facilitating trade. And there's plenty in our trade agreements that has even prevented us from regulating the digital economy writ large, right? And elements that are sort of baked in there. So it is a fascinating time, and it will be fascinating to see what materializes in terms of our trade future with the U.S.
We got a couple of minutes. In a perfect world, again, and I know this does not exist, how long would this take to get to a scenario in which there is more competition, there is more innovation, and there's that kind of organic growth?
I mean, I think you could block out elements in kind of short, medium, and long term, right? Find the lower hanging fruit, listen to people. A couple of years ago in Ontario, sorry for all these Ontario examples, but you and I are in Ontario, so that's okay. Manulife announced an exclusive agreement with Shoppers Drug Mart for certain drugs, that if you were getting those drugs, you could kind of only get them at those pharmacies with that insurer. And people really revolted. It just didn't sit well with people. They're like, no, we don't like this. This doesn't seem right. And the two companies announced, okay, they're not going to do that. Now, Ontario has been looking at, should we make a rule that prevents that? Quebec has long prevented that. Quebec has legislation that says, no, we don't want the vertical integration of pharmacies with insurers. So sometimes saying no is actually quite powerful, right? There are things we can do that are not expensive, but they're parametric, right? You set the rules in legislation to clarify and offer that market guidance, right? What's appropriate, what's not, where are elements overstepping? So I do think there's plenty that Canada could do as a kind of 1, 3, and 5 year project. And then you can look back and build trust with people and say, look at all the things we've done and how they're improving people's everyday lives. I mean, we talk about maybe having a pharmacare system in this country. Pharmacare is a competition question, right? Pharmacare is about generics and biologics and what's affordable and price. It's not just saying, okay, the state's going to pick up the tab for everything. It's understanding how that market's going to operate when the public is going to be the main purchaser. Anyway.
It's a great point. Vass, I thoroughly enjoyed the book. I enjoyed our conversation today, and I know all our viewers can get the book either virtually or in a bookstore that's been standing for years and years and years. Thanks for the time today, and best of luck with this.
Thank you so much.
Thanks for checking out the Newsmakers Podcast, and a big thank you to the All-Star cast behind the scenes. If you like today's episode, click the thumbs up, hit subscribe, leave a comment as well. Catch the Newsmakers Podcast on chch.com/podcasts and wherever you get your favorite podcasts.